Hey everyone, this is Scott Johnson with Pitt Home Buyers here. I hope you guys are having a great day. And I wanted to make a video to kind of go over the differences between a foreclosure and a short sale. Because they're two different things, although they can be done in a foreclosure situation. But a lot of times there's some confusion as to what happens, what are the steps, what can I expect to have to work on when I'm going through this process. And so that's why I wanted to outline each one so you guys had a better understanding of it. Now, this isn't a fun situation in general, and I'm praying that none of you are ever going to have to go through it. But if you do, then this I will hopefully enlighten you and help you, give you more information that you can use or just kind of understand. All right. So the first thing we're going to talk about is the foreclosure. So definition of a foreclosure, in my opinion, is 90 days late on your mortgage payment. Okay, so a little background on this. So after the first 30 days, of course, your bank is going to send you a notice. After 60 days, they're going to send you another notice and a notice of pending foreclosure. And after 90 days, in the bank's eyes, all bets are off. All right, because 80% of the people who get up to 90 days late, they're not going to be making that money. They're not going to be bringing up that loan anymore. They're pretty much assured that they are going to be foreclosed on, and the bank is going to have to seize that property. All right. So foreclosure is essentially the bank taking back the asset so that they can resell it to make up for their loss. Again, it is the bank taking back their asset so that they can resell that house to cover their loss. Right? So let's say you owe $180,000, your property is worth $180,000. You still owe $120,000. Well, what they're going to do is they're going to seize that asset. They're going to put it up for auction, right? And they're going to sell it. Another way that this can happen is and that is a foreclosure, okay, is them just taking it and selling. Now, one of the ways that they can do it is via a short sale. Now, a couple of notes. Short sale is a long process. Now, even in this market that we're going through right now, we're here in Greenville, North Carolina, it is going absolutely nuts here. When a property is put on the market, they are getting multiple offers on that property the same day. The same day. All right? This is reminiscent of something, too. Oh, yeah, 2006 through 2007. But we're not going to go there. All right? So properties are flying, and that's obviously cutting down on the time. But in general, what a short sale is the bank accepting less money for the property than what is owed. All right, again, a short sale is a bank accepting less for the property than what is owed. Now, there's a couple of things you need to know about this. Let's say you own the owe $120,000 on the property. Back to our other example, and because of the condition of the property, it's only able to sell for $110,000. Now, in some cases, you can be responsible for that $10,000, and they can keep that $10,000 as a loan to you or on a mortgage. Or they may tell you, listen, you need to go ahead and pony up and pay it. Right? So that's one of the big things with foreclosure short sales that could happen. Right? Now, the way a short sale works here in Greenville, North Carolina, is that what the bank is going to do is they are going to first, you have to tell them, let's try a short sale. What are the benefits of a short sale, which we can do another video on? One of the big benefits is the foreclosure doesn't go on your credit. That's a big one, all right? Because after you get foreclosed on, it stays on your credit, and Fannie Mae and Freddie Mac, who are the government organizations that buy loans from the big banks and guarantee them, they will not purchase a loan from someone, or if that person who is borrowing has a foreclosure on their record for 7 years, so up to 7 years. So after the 8th year of the foreclosure being on your record, Fannie and Freddie will start buying it again, but up to 7 years, Nada. And if Fannie and Freddie will not buy it, there's really a small chance that a bank's going to lend it to you, because that is how they make their money, right? They write the loan, they sell it off to Fannie and Freddie, and then they can get that money back and re-lend it out. All right. Okay, so how a short sale works here in Greenville, North Carolina. What's going to happen is the bank, you have to bring it up to the bank, say, hey, can we try a short sale? Just get rid of it, and the bank will, if they agree to it, what they're going to do is they're going to talk to a realtor, get them to assess the value of the property, and they're going to list it on the MLS. Right? It has to be listed a certain period of time, which varies by bank. All right, so it could be 30, could be 60, could be 120 days. I don't know, right? And they're going to try to sell it for that 100 or 120,000 or even 180 to see if they can get all of their money or make a profit on it. Now, if it doesn't sell after that time period, then the bank will begin lowering the price little by little. As I said before, this is a long process. Okay, now it may go just like that, but it may not. And the unfortunate thing about it is the foreclosure process does not stop during a short sale. Let me repeat that. The foreclosure process doesn't stop during the short sale, which means that even if you are waiting on the property to sell, it could still be foreclosed on, and then they can just auction it off. All right. So it is one of those like last-ditch efforts to save your credit, and it does work for a lot of people, but unfortunately not everybody. Okay. So I hope that helps you understand. Let's kind of recap a little bit. So a foreclosure is, in general, the bank seizing the property from the borrower and auctioning it off or selling it to recoup their money. All right. And a short sale is a way to stop the foreclosure process, whereas a bank agrees to take less for the property after they list it and lower the price down little by little. But that does not stop the foreclosure process in general. Okay, so I hope this is informative for you guys. If you do find yourself behind on even one payment, be sure to reach out to us at Pitt Home Buyers, because it's important that you understand your options. Obviously, sometimes you think, you know what, I missed a payment, it happens, I'll pay the late fee, I'm good to go. And there's a lot of options, which we'll discuss in our upcoming webinar on 4 ways to stop foreclosure, right? But at the same time, it's always important to understand your options, because something may happen in that time, and all of a sudden one payment turns into 2 missed payments, and so on and so forth. But anyway, guys, thanks so much for listening, and I'll talk to you soon.